Hey traders, welcome to Charts and Coffee. Good morning, everybody. Happy Thursday. We are just one session, right, or going into the session after Powell's panel discussion. It was an interview that he had for a televised event, and he talked about rates and everything else. And really, I didn't listen to everything he had to say because I could watch how it was being perceived. And this is really where he didn't talk down expectations for that quarter point rate cut in December. Hence, they're still lingering in that 70% area. If Powell looked at Fed fund futures, and believe me, they do, that the Federal Reserve does, he does. If they looked at that and said, wow, the probability, what they're expecting, they meaning us, you, me, investors, traders, are expecting that quarter point cut. If I need to get on that interview and talk those expectations down, that was his opportunity. So barring any crazy non-farm payroll number. Now, what would be crazy? So what's the deal? It's really simple. And I'm going to just give everyone, and we'll talk about it tomorrow too, but just kind of giving everyone a heads up on how to look at this data and what it means. All right. So you have this 80% right there. That 80% is basically fully discounted. We're never going to know what's fully discounted. It's a funny thing to say, but that's basically the fully discounted. We're about 10% below that right now. So there's still a question mark lingering over what it is that we could get on the 18th of December. All right. The next thing is to get this quarter point cut, right? We'll probably need non-farm payroll tomorrow to be flat or weak. Now, if we get a better than expected strong non-farm, it tells the Federal Reserve that one of their dual mandates, their employment mandate, is fine. And if they want to tap the brakes, they can. That's where the jobs data is still where good news is bearish and bad news is bullish. So flat to slightly weak. A really strong NFP would probably, it could drop this even more. It doesn't mean the Federal Reserve won't cut. Look, it's still 70% they're going to cut and only 30% they're not. So let's take it like weather. If someone said there's a 70% chance of rain, it's probably going to rain. I know. Meteorology and weather science aside, that's the way we perceive it. That's the way we're going to perceive this. But getting above 80 is the key. And non-farm payroll is basically the thing that stands between that kicking over 80 or maybe still lingering with a big question mark like it might into the 18th. Now, why do we care, right? Who cares? Well, here's why. If the expectation is for that quarter point cut, that'll be the last cut of the year. That'll be a full percentage point that the Federal Reserve has cut across the September, remember 50 basis points, November, quarter point, and then, or 25 basis points, and then another 25 basis points or quarter. In December, that'll be a full 1% less or 100 basis points less than it was before the September meeting. And that will continue to propel equities generally higher. Not everything is going to benefit, but the things that have been strong, the things that have benefited from the cuts that have happened, and even the anticipation of the cuts to happen are continuing to move higher. Is now a time to be bearish? In certain pockets, sure. But in terms of the broader averages, as quote unquote weak as an index is the NASDAQ. And even that has woken up in the last 3 sessions where finally Apple and Meta mostly have just exploded higher and have joined the strength that has been in place with Amazon and has been in place with Tesla. And so we're seeing 4 of the 7 magnificents really get going. There are still some laggards, NVIDIA still, kind of a dumpster fire. Google and has not been really participating. So when you say Rog, but NVIDIA was up yesterday and it's up off the lows on the 27th, granted, but we're not punching up through highs in the 21st. For the NASDAQ to really keep pace with the S&P and the Dow, you've got to see individual stocks, you've got to see individual sectors, not just move up, but move up through key levels. Movement higher isn't necessarily the only thing that's important. Is it moving higher through levels that are new? Are they new highs? Are they resistance levels that are broken? Things like that. So that's where we sit right now. Window dressing is in full effect in terms of my wanting to buy dips in those strong names that have been leaders quarter to date. Sector rotation will be something we'll talk about next month, right? Next year. But right now, let's just focus on strength getting stronger. So our job is to find the things that are in uptrends, buy them on dips. I will say there are two quirky sectors so far. Energy and financials have been hit relatively hard the last 3 trading days, since December, right? December's not been kind to financials or energy. But remember, these are two sectors that probably disproportionately benefited from the election optimism, right? They benefited from optimism around maybe a little bit more favorable regulatory environment after the election. So those two are markedly pulling back compared to what they've done since the 5th of November. And that's where we are right now. Are there other uptrends? Absolutely. We usually stick with the broader averages, the heavily weighted sectors, and the Magnificent Seven, which frankly aren't all that magnificent. There are some that are behaving well. There's some like Google. Yes, it's had an up day, right? But it's not really breaking out in a meaningful way. Meta is making, you see the difference between Google being up and Meta making a break above 600 where we've seen all this resistance before? That's the difference. Do you see the difference between, say, Microsoft being up, but still contained by that level around 440, or you look at Apple, which is up, and you can see here, meaningfully made new highs above 237. That's what I mean about don't just look for something that's up. Where is it up? Where is it within the perspective of previous resistance? And so those are really helping a lot. Okay. This is probably as good a time as any. Because look, Rag, okay, that all sounds interesting, but what's your book look like? And I love sharing the book in the session. So let me do this. Make this font a little bit smaller. There we go. Okay. So now this is our book. There we go. These are the current swings. I got stopped out of financials yesterday. I think it's really important to talk about getting stopped out. It's the only way to grow an account. I talk about this in the Sector Secrets Mastery. Take tiny losses for big wins. Puppy, you want to go back out? All right. Can you wait just a couple minutes? She doesn't want to wait. All right. So give me a sec. All right. You want to go back out? There you go. I know. It's beautiful outside. All right. Today, this whole week has been bring your pup to work. Bring your pup to work week. All right. So this is Wednesday's. Trade alert recap. These are all the swing trades that we take in the Sector Secrets Mastery. Every one of these is an alert. We don't call audibles in the room. These are all things that were sent out before the trade triggered, because these are setup alerts that we send. The trade subsequently triggered after the setup was sent as an alert, right? And then this is what we have. So there's a number of things that we're slowly closing out as we're getting close to the December 6th expiration. We've got some traders in December 6th Walmart calls, which are still, obviously moving very well. We had another scale out and close yesterday for traders in Walmart. Because look, I don't want to be in a December 6th option with no time to make decisions. So, 1 or 2 days before expiration, I'm going to start looking for those surges that I could capitalize on. Rather than thinking, am I getting every single inch of the move? I'm going to say, look, can I scale out and just pay myself and close the trade out before the uncertainty of expiration? All right. So then it also leaves a number of 20 December options in Walmart for those traders who took it. And frankly, I'm going to be a little bit more patient with those. I've got 2 weeks. My T3 is going to be more ambitious given the fact that I have more time. All right. Amazon's a great example of having both expiration dates, 6th and the 20th. I've got to be more active about the 6th. We bought the December 6, 195 calls at 591. This is the information that goes out to the members every day, every entry, every exit, every day. So entry at 591, first scale out at 1035, second scale out, Amazon's been in a tear at 2210. And you can see here the Amazon December 20, more expensive, right? Because having those extra 2 weeks is going to be a more expensive call. They were both bought at the same time, but notice the difference between the two. Some traders are going to say, Rog, just a sub $600 option makes a difference with my being able to buy multiple options as opposed to just a sub $800 option. And it's really up to the trader. But you do get what you pay for, and more time will cost more money. But with those, we bought them at 782, scaled out at 12, scaled out at 24 yesterday. So it's been a good trade. But it's been a good trade because we're focusing on things that are trending. Walmart's nothing to sneeze at. We bought 3 times. We had 3 predetermined scale-ins with the original alert. Bought at 285, 265, 254, right? It's not as if we're buying at 285 and the trade goes dramatically against us. We're buying at $1, right? That's adding, that's dollar cost averaging. That's just a bad habit, right? So you notice we've got a zone, and I was able to build a position in roughly a 30-cent zone. And then now we've scaled that at 350, and now we scaled that at 542. So again, every single entry, and then you could do the math from each to 350. You can do the math for each to 542. Not a bad trade. But the cool thing is, and think about this, I'm not buying one contract. Some traders are. If you have a smaller account, maybe you bought 1, 2, 3 contracts. If you have a larger account, maybe you bought 30, right? So as we scale out, depending on the number of contracts you have, we're always thinking about 3 scale outs, a T1, a T2, and a T3. So we try to position size in such a way that we can have enough contracts to do that. And part of that is having a price of the option low enough that you can do that without disproportionate risk to the account if and when you get stopped out, right? I know nobody gets stopped out, just like everybody makes money when they go to Vegas. But back in the real world of trading, we have to realize that small losses are part of the game. For the most part, traders really just don't like taking losses. So they've devised all sorts of ways and lingo just to not realize a loss. It's the world of denial in trading is quite a giant one, right? And we wrap it around in all sorts of euphemisms around technique and tactic, when in reality, when a trade is beyond the point of its validity, think about it this way. If you've got a trending trade, you know why it's trending, right? And you should equally know why it's no longer trending. Wouldn't validity be a great place to understand why a trade is no longer something you should hold? Also, having those levels known beforehand, when I tell my traders via an alert, I want to buy at these 3 spots, everyone can allocate their funds proportionately to the amount of risk that they want to take in their account. They could even choose to say, Rog, I know you've got an aggro entry, but I'd rather wait for the moderate or the conservative. That's where my budget, that's where my risk tolerance, that's where my comfort is. Those are the things that make trading something we don't do as a blind trade along, right? These are things where everyone should know, including myself. I want to know what all my choices are at the onset of the setup. So think about that when you're setting up your trades. That's the book we've got. November's been very good to us. We continue to manage a lot of those winners into this month. And then we're looking for an event for a pullback to get that next round of trades. December, the month of December is very young, plenty of the month to go. Very, very optimistic about what it could bring. Okay, so if this kind of stuff, by the way, is cool, thinking, Rog, my book doesn't look like that. Come check out what we're doing in the mastery. And by the way, I know December is kind of a quirky month, right? Because between the holidays, between the week between December and New Year's, family coming in, all those things, kids coming home from college, whatever it may be. I know December is kind of an odd month. So I do want to give everyone a heads up. We are doing something very cool come Q1 of next year to really give everyone the best way to take advantage of the mastery, the Sector Secrets Mastery, which with an immersion process that I've never done before. Can't wait to tell you more about it. Can't tell you everything now because we're still kind of working out all the details, but so far it's looking very cool. It's exactly what a lot of members have been asking. Rog, how do I get started where in a month or a quarter I can really get up to speed? Because we are learning a new skill, right? Day one is not, oh yeah, I get it, and I'm just going to follow along. People who join a mastery want a community. They want the trade ideas, but they also don't want to be flying blind. They want to understand why they're doing what they're doing and why these trades are working and how to manage risk and how to position size. These are all core tenets of the Sector Secrets Mastery. So cannot wait to tell you more about it. It is coming in Q1. All right. Let's see. What else do we have here? Bear with me. I'm just kind of going through the questions. Bank of America. Oh, sorry, Pierre. Oracle. Sure. Oracle is a cool one. It has been one of the relative outperformers. All right. So I've been comparing, obviously we're going to compare it to things in semis. We're going to compare it to things in the Qs. What are the leading and lagging sectors? What are the leading and lagging stocks? So if I can find an overall uptrend, I'm comparing the different sectors. I'm comparing the different stocks that Oracle hangs out with. Oracle's got a trend. It's been a little tricky, but it's probably one of the better individual stocks. I'm with you there. It's a really good individual stock that most recently, from the 27th to the 3rd, gave us a mean reversion. You might say, okay, Rog, for those of you that are not familiar with that, these 3 lines are the mean reversion. Now, there isn't, and I shouldn't say the mean. For me, it's the mean reversion that I use. There's no such thing as the mean, right? We all have whatever that calculation is based on the look back. To me, I'm looking at a mean reversion, essentially based on a 34 period look. Some folks might use a different look back. So we have to know what the mean is based upon. For me, that's what it is. And that's where it was. So yeah, nice looking mean reversion. I would absolutely expect a continuation. Yeah, nice setup. Yesterday wasn't the day, but if you all are wondering, okay, Rod, specifically, what days were the best days to enter? Down days into the zone. So specifically the 27th and the 2nd, those down days into the zone. All right. So yeah, great looking chart. Jazz asks, Bank of America. Jazz, I'll tell you, I've been leaving financials alone. Other than XLF, which I just got stopped out of. I have 3. Well, let's go back on over here because this is where details really do matter a lot. So if I'm looking at the 3 trades that I've got, Wells, I'll leave that one kind of off because look, Wells we bought before the election. It's up in a monster way. I'm just going to ride it out to expiration or a tightened stop. So we'll take that one off the table. I ended up taking financials and take a look at the numbers, gang. This is what I lost per contract. I like talking about losses. We don't normalize talking about losses. The flip side of that is you will blow up an account because you're not looking at the thing that presents the most threat to your money, right? The other trade we've got, and that one's doing okay, is this one here. So both Wells, the first trade I took in financials, the second one is XLF. Those are fine. We've already scaled out. They're winners with a tightened stop. I'm only risking unrealized profit. This one down here, XLF, that one does represent a loss in my account because it never got to a break even. So this is a loss of my dollars. Really important, right? Do I mind losing 128 to 92 and 125 to 90? No, not when I've already taken 202 to 249 and whatever's next, or even 305 to 1080 and above, right? So that's fine. But notice how we make our losses very small so our winners can run. So I've been a little hesitant. Now, you mentioned Bank of America, and I'm with you. If I'm going to buy financials again, I'm going to go with a relative outperforming stock. And that's where right now I'm a little uncertain as to whether or not I want to commit to financials again. I have still some in my book. So that's probably important to know the history of the trade to know whether I want to add more exposure to that singular financial sector or whether I want to start thinking about other sectors. But Bank of America, JP Morgan, neither one of them hit the gray zone for me yesterday. So I don't have an entry there because none of them went green candle to gray zone, but I am keeping an eye on them. And I have now, by virtue of being stopped out, lightened up some of my financials, but the other two positions of the three total that I had, two of them are winners. One of them was a loss. So again, all the numbers we want to be, this is what transparency is, by the way, gang, right? What have I bought? All the entries. And where am I skilling out? All the exits, right? So then everyone could do the math and go, oh, okay, Rog, you lost, right? From 128 to 92 cents. Got it. Times a number of contracts. Let's see. Next up is Nomo says, hey, we're expecting a sure I'll wait to go out from the pup. I kind of was hoping the pup would be interested in what we're talking about here. I've been trading pretty well through November. And so, yeah, I thought the pup might want to listen in. All right. Next up is Ken says, can I learn what I'm doing and get the trades? Yeah, that's exactly what the Sector Secrets Mastery is, Ken. It's this process. It's the detail of my trades. It's the alerts. It's the sessions. Absolutely. That's what Sector Secrets is. That's my main room, gang. That's where I hang out. That's where I am. That's where my alerts are. And really kind of interesting for those of you that are curious, Lorna Bott and I were looking at our daily price movement range and hourly price movement range list. I'm sure some of you either picked those up during Black Friday sale, which if you haven't yet, gang, please do. If hourly price movement ranges, the green and red zones and the yellow and gray zones are something you're interested in, pick them up on Black Friday. We're actually looking at creating a little bit more of a crypto type pack where we already have Bitcoin and a couple other of those Bitcoin related stocks. And we're just looking at other ones that might be a little bit more crypto related because that narrative is back. It's come back around. So we got a lot of cool things in store for the next couple of months. All right, gang, I got to go. I ran over. So sorry about that. I'll be in the Sector Secrets Mastery room in just a few moments. Be good to each other, gang.